Hey, it's Phil Ratcliffe with Rebel Financial, and welcome to another one of our great live broadcasts. I do love when we kind of mix it up, so we love having our great guests on. But sometimes we also like to delve a little bit into what we do and what we're passionate about and why we do what we do. And so today we're going to kind of share with you two different issues that in my mind really go together, and that is we consider ourselves a non-traditional firm in the financial services. And so we want to discuss a little bit about what is traditional and what makes us non-traditional. Because I guess you can be non-traditional in lots of different ways. But ours is for the purpose of why we see ourselves as different, how we serve our clients and society, and where we feel our place is. And then the second is, stemming from that, how do we help people? Who are we trying to help? And what's available now, and what are we trying to do for the future? So those are kind of the two things that we want to put forward in this live broadcast. So thanks for tuning in. I think it's going to be really good. You got to listen because it's not a light subject. But to me, it's a very defining difference versus if you choose you want to work with a financial advisor, and then who do you work with? So when we talk about traditional, there's really kind of four things. And so first, the primary traditional of where financial advisors came from, probably go back thousands of years, but, just in kind of modern history, is when brokers came around, to help sophisticated investors be able to buy the passive investments that they wanted to. So, stocks and bonds, and even in the banking side of things, when, people were, investing in savings accounts and CDs, and what so. And so that's where the financial industry really took off in terms of serving consumers. And up until the 1980s, when mutual funds really, came out and about and got popular, this was mainly a very wealthy thing, and still we see in our society that most of the wealth in the world is concentrated in the top. And so investing traditionally was just basically going and being an order taker, making products that people would buy from you. And so that's the traditional investing side of things. Financial planning, in my opinion, has really only blossomed in the last 10 years. Of course, there's been people, practicing financial planning for upwards of 50 years. But again, until the last 20, it was pretty superficial in terms of what they were doing or what they could do. I mean, it's difficult to be able to run all of these calculations with how complicated our lives are. When we talk about financial planning, for most of us that are financial advisors, we talk about comprehensive financial planning. That means looking at all aspects of a person's situation, from their cash flow to their debt, their entire balance sheet. What do you own as in assets? What's the taxable situation and consequences of the actions that we take? What's this going to do to your estate? What do you even want to have happen in the long term with you spending your money versus what you leave to people? And looking at all the things in the middle that are going to influence that. And it's really complicated. Even today, with all the stuff that we have, everything that Google and Apple and Amazon and all of them can do, we still could not solve for a medium complex, upper middle class Americans answer to their retirement plan. There's too many variables. And so there's just not enough processing power on the world right now to solve for that. And so we still have to use Monte Carlo. So a lot of people don't realize, how complex it really is when we do financial planning. But traditional financial planning was, punching stuff into an Excel sheet or using simple financial formulas, using rule of thumbs, et cetera, which if you had a good financial advisor, there's an art to it, but definitely could help. But the efficacy is probably in the single percents what an awesome comprehensive financial planner can do today. And I would still say the majority of financial advisors still practice the financial planning, we'll say pre-modern financial planning versus the post. And you can really tell that by the complex financial planning software that they use, the amount of plans that they do per year, and even just talking about some of the stuff that I'm talking about right now. If they talk about that and they're a CFP, which is a certified financial planner, they talk about being a fiduciary to you, they build at least 20 plans per year, they're probably doing the postmodern planning that we're talking about there. So that is, how planning has evolved. And then the other thing is almost every financial services company out there today, except for pretty much credit unions and Vanguard, maybe USAA, and TI Craft, are pretty much just out there to maximize profits. So when we really think about what a good financial advisor is, I think most people would almost put that into equivalence with a doctor or a physician to them for their finances. And I think that you would expect your doctor or physician to put your interests ahead of their own if they own stock in a biotech or a pharmaceutical company, or if they owned a part of a practice, but there was another specialist that was good for you. They should not put that conflict of interest, their interests, ahead of your own. And in our industry, we're really behind that. And so you really need to ask, is somebody a fiduciary if you're going to see them as a financial planner? If you're just going to go and buy an annuity or a CD or something from them, and you're just buying from them, you're not asking them for advice, then fine. But again, this is kind of the evolution of traditional. All these things are kind of traditional. When we get to us and we start talking about non-traditional. So what's non-traditional? In the past, a lot of people have used some of the stuff that I've talked about. Sometimes when they are a fiduciary, people will call themselves fee-based instead of fee-only, meaning that they don't take commissions and what so. And they will do a lot of the traditional investment order taking and making money from that, but they'll call themselves financial advisors and financial planners. And so to me, that's bad. And so it's okay if they hold themselves out as a rep of that company and that this is what the relationship is, but that's just not how it is. I mean, 90% of consumers think that their financial advisor, basically all financial advisors, are a fiduciary, when in reality, it's pretty much less than 10% are fiduciaries all the time. So in that respect, non-traditional to me means focusing on financial planning, being a fiduciary all the time. And there are lots of firms like that. I mean, really easy. If you want to find one, just go to NAPFA. That's our organization, National Association of Personal Financial Advisors. And they have a thing on here. I'm going to start switching over to the computer so we can go to some things instead of just me talking. But if you click on our link on our website, it'll take you to our profile. But you can come up to here and you can search, any area that you want to in whatever area of planning that you're looking for. And these are going to be fee only, which means they only take money from clients. They're all fiduciaries. If you want somebody that's hourly, try Garrett Planning Network. That's another good one to find that. So that just gets you to where, again, I think this is non-traditional, but in the financial planning realm, that's becoming pretty traditional. So the last 15 years, even though maybe these advisors are still only less than 10% of the industry, this has gotten standardized. So it's traditional for that part of the industry. So what makes us non-traditional even beyond that? And so really, I think it comes down to three things. Number one, and this is why one of the primary reasons we founded Rebel Financial is that we do not believe in profit maximization. So we're not a nonprofit, a 501c3, but it is our last consideration. So our clients are first, our employees are next, our community is behind that, our country is behind that, and then owners and shareholders are last, because to be successful, you need to help other people be successful, and that's the crux, in my opinion, of a good society. And I want our company to be an awesome part of society, not just something that takes from it. Or even in the best case circumstances, it's an even trade from what I take versus what I give. We should give more than we receive. Another thing is, we do not believe in aristocracy or a financial elite. Now, we don't not believe in it like people don't believe in global warming. We know it exists. And it is the norm of things, but we don't think that it is necessarily the right way for us as a species to go. And we think that by helping our fellow man that are lower or lower middle class or middle class raise themselves up and do better with the resources that they have, we will have a better community and a better society in general. I mean, just look at how well the United States did from the end of World War II until pretty much, maybe we say the tech boom. I mean, things are still getting better. But, I mean, that progress was primarily because of the rise of the middle class. And we're losing that. We're changing over to financial elitism. And so from that respect, the things that we can do to build a good business, to help our country, to help our individual clients do better with the resources that they have, instead of just crying about it to different politicians, we're going to help every individual person that we can do more with their resources. And to me, that's very non-traditional. Most of even the good fee-only fiduciaries, if you don't have $1 million, they don't want you as a client. Those $1 million people, I mean, not knocking it. There's a lot of middle-class people that are farther on to their retirement that have over $1 million. But a lot of times, they've got tons of people to help them. But the person that only has $250,000, worked as a steel worker, for 30 years, and their wife was on and off working while taking care of the kids as a PCA at a hospital, those are people that can really use help, that we can make a difference in their lives. And then young professionals, that might be starting their career, that don't have big accounts, but they want somebody to be a fiduciary and help them and be a partner, and they want to invest in ways that align with their ideals and morals and values. So that's very important to us. And we are very dedicated to providing solutions for that, not making products or just making some service where you can pay us, but continually evolving to make that better. And we, as you're seeing right now, I mean, this is live streaming, on our Facebook and on our YouTube. Right now, we're dedicated to continually producing new content and stuff, most of the time for free, because we want to help people, and we want to lower costs. Eventually, almost to zero. We believe that technology, even in a service industry, will give us that ability to be able to lower our marginal cost to where we can still make a good living, but drive down the cost to almost nothing. It may take decades, but still, it's doable. So what are we doing right now? So just skipping past all the stuff, what are we doing right now? If you just take a look at our site and you look at the services and the pricing, we're very unique in the entire financial services industry. There's really nothing out there like that. And, some people would say, well, why? Is it being different for the sake of being different? No. It is because when we see where different people are in different spots of their life, they need different things. And we want to create solutions for them that are affordable to where we're giving them back a lot more value than what we cost. But again, that we can still make a living and survive. And then we give people the option to work with us on an ongoing basis. Or they could be one-time clients and buy a financial plan from us for retirement or for their entire financial plan. We're getting ready to roll out some new flat fee planning for college and even some Dave Ramsey-esque type things in terms of for younger people that actually want a program of us saying, in a certain area, where should I buy a house, for how much, what type of mortgage, what % should I save, when I've got the ability to control these things from the get-go. So we're trying to create solutions for people, and this exists right now. This is how we run our business. We didn't just say, how do all these other people make a bunch of money? Let's just do what they do and then have better marketing. We are building something different, and it will change as the demands from our clients change, as we figure out how to serve people farther down the chain as well, too. And to me, that's a very significant difference. We didn't do this to just make money. And we did this because we think it's the right thing to do. We take care of our clients because we think it's the right thing to do. We spend 2 or 3 times more on our financial planning software and process than most firms do because we want to be the best. And it's not that much more. But a lot of people might say, we only get 8% more efficacy for that. Why would you spend almost double? 8% can make a meaningful difference in a lot of people's lives. And since we're not there to maximize profits, and we can do it, we will do it. This is the difference in the decision-making that we make. So since we started, not only have we gotten better, and most of our clients are really happy with what they're paying us, we've lowered prices 4 times. Not because we couldn't have raised prices 4 times. I get some blasting feedback from some of my peers and wholesalers to say, well, that's not how market economies work. You charge what the market's willing to pay you. I'm like, no, we charge what's fair based on the margin that we're trying to hit. And when there's savings, then we can give them back. we want to benefit, but we want our clients, because we serve them first, to benefit more. It's different. So, and this is something that we've been doing constantly. We vote proxies for our clients, which most firms won't do. So if the executive board wants to pay themselves way too much, or the CEOs or what so, we generally vote against that. If there's something that's bad for the environment, we'll generally vote against that. So, that's an extra liability and a lot of extra work. We do that for our clients when we can. A lot of times we can't take those proxies away from the funds that we use, but when we can, we do. We build a lot of custom models for ESG, which stands for environmental, socially conscious, good governance. We have Christian values models. We have Sharia law, halal investing for our Muslim clients. And so we do this because we believe in building these things so people can invest per their values, because we very much strongly believe in ours, and it's important. And then one of the things I really wanted to point out, and it's how I got the idea to do this whole live broadcast, is the videos that we make. We put out so much video content, and it's all for free. To my knowledge, we have the biggest video library of any financial services firm in the country. And so, over 200 unique videos about different things. And so one of the things we spent a little bit of time on recently was creating these playlists for you. And so whether it's for you, or you got a young child, or a sibling, or an employee, or somebody that you think could benefit, like this simple one right here, these rules of thumb. We're getting ready to send this first video out to our email list on Monday. But it just goes over one of the most important rules that there are in finance, is spending less than you're earning. It's a great video. There's some great parables throughout history, and then we've got some videos about that, talking about the richest man in Babylon. How do you reduce debt? How do you set up a budget? And then, these are very simple videos, but you can watch them. You can get the concepts. If someone becomes a client of ours, we give you the tools to make it a lot easier, and the partnership, almost like a coach, to help implement these things. But we've got all different playlists for different things, from estate planning to investment management and concepts, retirement, etc. Go back through our live streams. It's great too. We got college planning, estate planning. So again, these are things that we provide for free to you, to the public in general. We hope that you use them. We're going to continue to produce and put new out there. We're producing them more and faster than ever. We're getting better at it. So, that's there for you. The next thing is we started a new company called Revolution, in which we're going to try to build out some financial technology, we call it FinTech, to really try to lever artificial intelligence and natural language and build that into our investment management and financial planning practice. Primarily, again, to achieve better results in less time for a lower cost, and to, again, take that economy of scale we can get from that and help people, again, lower down the ladder, and we want them to climb up the ladder. So that's another thing that we're doing. So, again, we're walking the walk in terms of, or walking our talk, I guess that's how you say it. And then we have a nonprofit called RIA, but for short, it's just foradvisors.org. And what this is we really care about our industry too. We think financial advisors and planners, really in general, if they all were to become, fee-only fiduciary advisors, at least the ones that really are financial advisors and planners. It's still fun for brokers and insurance agents and stuff. We need them too, but for financial planners, that's what we're talking about, to split away from the companies, be independent, work for themselves or another fee-only financial planning firm, so that we are truly a profession that our fellow citizens can trust to give them objective advice about how they use their resources to accomplish their goals. And human beings are awesome. If we get educated and we build up our resources, in general, when we average it out, it's going to make the world a better place. And so we believe in it. We give 5% of all of what we make to this nonprofit. It is a 501c3, and we try to get other advisors involved as kind of a pay-it-forward coaching when advisors are leaving the bigger companies to start their own firm. So our motto for that is advisors serving clients, not corporations. We also have a foundation for Rebel Financial. It's called the Rebel Financial Foundation. Basically, all we do is try to raise money for the National Science Foundation and the National Institutes of Health because we just believe in paying it forward to the end result of us continuing to advance as a society. You know, a lot of where we are today as a country and as a people is because people in the past invested in research and development, and education, and infrastructure. And as a percent of GDP, we're not doing that very well. And so we need to get back to that. And so this is our part. Again, we're not complaining. We're doing something about it, giving our own money and trying to make a difference. And then lastly, this is, you know, really kind of looking forward. Before I skip to this, one of the things that we're trying to do right now, I have no idea how long this is going to take us. But again, it goes back to the mentality of what we're trying to do, is we're trying to figure out a way to make a publicly available part of our portfolio development where we can invest in crowdfunding and microloans to where we can invest in regular middle-class people to start their own businesses and make their own products from things that we vote in large numbers that we think will do well. And the big benefit of this is traditional investing, where we've got some in large and medium and small and international and value and growth and different types of bonds. All we're doing is investing in really rich companies, right? They're big, they're wealthy already. What if, for very similar results, we could take a quarter or a third of that portfolio and invest in middle-class people that have good ideas that would have had to like go on Shark Tank and lose half of their money or their company to somebody just to give them some money? It's crazy. It's crazy. Just like the sharing economy, we can help each other, and we can fund those things in the future. And again, another thing that we can do to make the middle and lower class come up and not just wealth beget wealth over time. Capitalism is built on the best people having the ability to make it. And more that's not happening because wealth is becoming more generational. It's not the Bill Gates and the Warren Buffetts and the Steve Jobs and the Sergey Brin and Matt Pages and Bill Gates of the world with most of the wealth. It's the next generation and the generation after that. And you can see where capitalism breaks down. It was not made for that. So anyways, we want to build that into our portfolio. So first of all, we got to do a good bit of research, work with our regulators and so, but we want to be able to build that into our portfolio should a certain segment of our clients want to invest that way. Again, to my knowledge, we're one of the only people in the country doing that. And we're not doing it to make money. We're doing it because we think it's the right thing to do. And our base of who we want our clients to be and who we're helping, we think that they want that as well too, even if they don't know it yet. And lastly, this has been on my drawing board for like 5 years, but we got to keep getting Rebel growing good and running. But Singularity Financial. So if technological progress continues to go where it's going at an exponential rate, where are we going to be in the future? Are things going to be the same? You think they'll change at the same pace that they did in the past? Probably not. And if they don't, that's a whole different level of planning that, to my knowledge, again, no financial planning company does. And so this company will do that. It will be our sister company. And depending on how our clients want to plan, they will be able to flip or, I don't know, you can hedge your bets and do half and half in each or what so. But it's going to be really good planning, based on science and statistics, et cetera. But again, these plans go way out, and we have lots of others too. But again, we wanted to share with you why we're non-traditional, what we're doing, et cetera. So again, our mission is to serve people to live better lives, to have a very diverse community, country, world that continues to get better, that as the waters rise, all boats can rise. It's not just a mentality of scarcity. And so what we want to do is help people to do that over time. So again, we appreciate you joining in for this live broadcast. As always, it's a pleasure to serve. If you have questions or need anything, whether you're a client or not, just chat on the website, send us an email, give us a ring. We'll be happy to help in any way that we can. Join us next week as we have our own Tony Jones interviewing Nick Spear to talk about disaster restoration and recovery, which with everything that's going on, it's an in-demand subject. It'll be a great live broadcast. Apologize that this one's a little bit long. I think I always go a little bit longer when I'm passionate about things, but have a super weekend, and let us know how we can help anytime.